dollars serve that role and Bitcoin serves that role, but it is a matter of degrees. And so right now, the most liquid money in the world is the dollar. Bitcoin's remarkable in the sense that in a global scale, it's already one of the most liquid, especially, it doesn't have like a central jurisdiction in the way that, the Norwegian kroner does or the Egyptian pound does. But when you think, okay, what are the top 10 monies I would want to bring with me, bare assets, globally? Bitcoin's not number one, but it's in the top 10.
In a recent interview, macro expert Lyn Alden explained how technological advancements contributed to the decline of gold and the ascent of fiat currencies. She also highlighted Bitcoin's potential to reintroduce sound money principles in the digital age. The bigger and more liquid a market is, the harder it is to manipulate. The US dollar is therefore one of the least manipulated markets and quickest to recover when there is manipulation. According to Alden, Bitcoin stands out because it is already one of the most liquid assets on a global scale. The sound of panic drums has been heard loud and wide around the financial world since the collapse of Silicon Valley Bank and the near collapse of Credit Suisse. While currencies are facing challenges all around the world. The Egyptian pound traded at Egyptian £30.90 per dollar on September 1st, unchanged from the previous month. However, the currency has lost about 20% of its value against the dollar since the beginning of this calendar year. According to Alden, in a world where there are 160 different fiat currencies, all linked through a dominant reserve currency, Bitcoin offers a unique combination of modern banking speed and the inherent stability of gold. Alden explained humans have been trying to make gold and silver easier to use for thousands of years, leading to the development of various banking tools. However, the increasing level of abstraction in these tools has caused major issues, especially with the rise of telecommunications. This has led to the current system where physical money is too slow for the modern global economy. Bitcoin is a potential solution to all these issues. Let's direct our attention towards the few clips from interview.
For thousands of years, people moved up monetary technologies in terms of hardness. So they went from shells and beads and cocoa to gold and silver. Basically, the handful of commodities that were resistant to even industrialized debasement. But the modern era is different in the sense it's the first time a softer money won versus a harder money. And it's in large part because speed was a new variable that didn't really matter before the telegraph. And now that we live in this telecommunications era, these centralized ledgers have been a fiercely competitive alternative to precious metals. So in many environments, people still hold precious metals for long-term savings, but the combination of them being slow, them generally not being legal tenders, so their transactions are taxed, you have these centralized ledgers that have been remarkably efficient at getting market share. And so that's kind of how we found ourselves in an environment of 160 different fiat currencies, all connected to one master currency, because there's been nothing good enough to replicate that or challenge that. They've had this monopoly on no better alternative. And so one of the reasons that Bitcoin's interesting is, in addition to its other properties, it's the first time where settlements can occur at the speed of telecommunications, right? So the scarce bare asset itself can move, and it's not based on credit. So the ledger itself, back in the gold standard era, for example, the ledger really was gold. That was the foundation. And then this banking layer built on top of it was based on credit, and that could update much quicker than the underlying until that system broke. Whereas Bitcoin's interesting because you have the speed of banking and the hardness of gold combined, and it's almost as though you could beam around gold in real time. And that's what kind of Bitcoin has given us. And we're 14 years into testing to see, is it hard? Is it robust? Can it withstand challenges? Can it withstand 20,000 cryptos trying to replicate it and dilute market share, right? So it's undergoing these various tests and challenges. It's slowly gaining a monetary premium over time, or in some cases a pretty quick period of time. And it's this kind of new network that is potentially able to solve this 150-year local maximum we've been stuck in, where we've had this big gap between transaction speeds and settlement speeds.
Bitcoin has encountered minor bear activity as Bitcoin price stands at $25,660 after recording a daily decrease of 0.08%, and the weekly decline now stands at 0.5%. As a result of the Bitcoin price, the token's trade volume jumped by 45% during the same period and is presently at $84 billion. Since the creation of Bitcoin in 2009, cryptocurrencies have exploded in popularity and are today collectively worth over $1 trillion. Alden highlighted the common mistakes made by many Bitcoin investors. In the interview, Alden mentioned that Bitcoin's journey to becoming a widely accepted form of money is anticipated to be a gradual and long-term process rather than a rapid revolution. Let's direct our attention towards the few clips from interview.
Unlike most technologies, people do regress. They buy Bitcoin at the top, and then they make one or two mistakes. They either get overexposed to it, and so they don't expect the risk of an 80% drawdown, sometimes more, and they put half their net worth in it, and then they get wrecked during the bear market, and then they decide, this whole Bitcoin thing, it's dead. This makes no sense. I'm out, and so they actually go. It's like going back to not having electricity. They de-adopt the technology. Or the alternative mistake they make is they get into Bitcoin and they say, well, this other crypto is faster, or it does more. And so they say, well, I'm going to start diversifying into these other cryptos. And most of them collapse and they never recover. Swan, I think you did this research. Swan did research where they looked at like the 20,000 cryptos that are out there, and they found that only like 3 of them have ever made like a higher high versus Bitcoin in the next cycle. There's kind of a ambiguity about what you kind of can include as the next cycle, but there's really only been 2 or 3 or 4 of them that have kind of been able to achieve that. They don't really achieve it the third time. And so there's been this kind of demonetization of most cryptos relative to Bitcoin. But basically, people fall into these traps. Either they get over their skis with leverage or position sizing or diversification. They get wrecked. And then they decide that this is a trap, this is a scam, this is a Ponzi scheme, which for parts of the industry is true. But for, I think Bitcoin is a very legitimate technology. I think arguably stable coins are a legitimate technology, at least for now. And so you have this kind of small number of actually utilitarian use cases and this big kind of froth built on top of it. And so I think the way that Bitcoin monetizes is necessity going to be a very kind of slow, long-term process. It's not something that happens in a decade. It's something that happens in a generation or two. There are people born now that are like teenagers that Bitcoin was never not around for them. And so imagine what happens when people are 20 or 30 or 40 and Bitcoin, Bitcoin's still here. If it's not hit by some crazy technical bug, or it's not, like trapped by miner centralization or something, if it gets through various tests and challenges over the next couple of decades, if it's a 30 or 40-year-old network and primary wage earners and savers have never lived in an environment that doesn't have Bitcoin, in a similar way that many young people today have never lived in an environment that didn't have the internet, it just becomes a more natural part of money. And the more widely held it gets, the closer it reaches to its total addressable market, the less explosive the upside is. So the less enticement there is to leverage it. Nobody can print it. So eventually over time, people realize if you hold rehypothecated Bitcoin or leveraged Bitcoin, you're probably going to lose your Bitcoin. And so Bitcoin is kind of a very credible way to potentially solve this over time. And people just have to be careful not to go over their skis. I've never been one to recommend 100% Bitcoin allocation. You have to kind of allocate based on your size and your conviction and your volatility tolerance. It's money that you should set aside that you're not going to need in 5 years, and that you're willing to kind of laugh at 80% drawdowns. But if you can handle that cost of entry, I think that's one of the most profound technologies at least of the 21st century.
The crypto market is known for its price volatility, which can impact the value of tokenized assets. Many governments have taken a hands-off approach to crypto, but its rapid ascent and evolution, coupled with the rise of DeFi, has forced regulators to begin crafting rules for the emerging sector. In countries with historically weak currencies, including several Latin American and African countries, Bitcoin has become popular with populist leaders. This concludes our discussion for today. We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up and don't forget to subscribe to our channel to stay informed on the latest news and videos. Thanks for joining us.